front, and you also will have an opportunity to participate when it comes to question and answer time. So what is this? This is the Darproperty Forums event, and it was supposed to have taken place a couple of weeks back, as you know, but due to some unforeseeable circumstances, it had to be pushed forward. And here we are this evening, right here, the day before we kick off Easter. And I cannot thank you enough, because one of the things that we were concerned about is, are they really going to show up, considering that they are going to go for Easter and they want to be with the families and everything. So I'm just going to applaud you for making your way here and being with us on this evening. It is my job to try and make it as fun as possible, so that when you do go, wherever you will be going, you will remember us in a positive way.
I'm president of an arrangement that brings together anybody who has been through that university, either as a student or as a lecturer or a professor. My presentation is actually giving a historical background, which will then provide a basis for these gentlemen who really know the workings of the market, including the formation of the National Housing Corporation. It was the first public corporation formed by independent Tanganyika, and its mandate was entirely to build low-cost housing and increasingly urbanizing Tanzania. There were also slum clearance programs. Most of what is now Kisutu, Magomeni were all slums. They had Makuti houses. All those were included in the program to clear the slums and build new structures as you see them now. And there was also a vibrant mortgage market, but this basically benefited, it was arranged to benefit communities. Amongst the communities that were most active at that time include the Somalia group and other such communities. So, what were the major impact of what happened during that time? There was still supply of good housing, but it was very low and couldn't cope with increasing urbanization at that time. And certain communities seemed to be at a disadvantage compared to others. So you find some people, because they're not organized, they don't access financial markets, they were kind of at a disadvantage. And then there was introduced what was called the leadership code. And this leadership code prevented anybody, any Tanzanian, who was employed in the public service, so had a salaried employee, to actually participate in investment in housing. So you could have your position, you can keep your salary, but don't invest in rent housing. And then there was the Rent Restitution Act. It had been there since 1962, but in 1994 it was strengthened. And anybody who has rental properties could not rent that property above the ceiling of 14% if it was residential, or 18% if it was a commercial property. Now, fast forward 1984 to 2005. We now start some reforms being initiated, which will have an impact on what we are having today. The leadership code, which had prevented people from investing in real estate, was removed. There was a Zanzibar declaration replacing the Arusha declaration, and somehow the blow was softened. And from efforts which my colleagues and I participated, we were able to convince the government to remove rent restriction, the Restoration Act. The national housing was merged with the registrar buildings, and I became the second Director General there to make sure that this merger took place, and we had to restructure national housing to make it a bit more commercial oriented. And national housing, as a result, sold to tenants the properties that had been built from 1962 to 1994. These were in very bad condition because they had not been maintained, because the rents were very low. But the end result is that the tenants who were there, once they were given ownership, they all of a sudden had the ability to spice them up, and they became very good properties. Many properties in Magomeni, Kinondoni, all these places that you see now, most of them are ex-national housing properties. Finance markets opened up, and introduction of many commercial banks, and some of these commercial banks introduced slowly and expanded the products to include their mortgage financing. And then another thing which was topical at that time is that tenants in government houses, as well as in some parastatals, were allowed to buy houses that they had been renting them. So they changed from tenants to become house owners. Again, the impact was very positive. Many people were able to repair and redevelop their properties. And but one thing we should know that the properties at that time were sold at what you can call consumer-friendly prices. They are not really market prices, but that is history.
For those who came in late, Karibuni sana. Remember, this is the Darproperty forums. We hope to have more of these in the near future. This is a great beginning where we have the specialists who tell us what's going on in the market, real estate market, and we have you who can also chip in, which you have a chance to, as to how you feel, what you think, and as Mr. Masih with courageously tackled the elephant in the room, which is government. You can also ask him questions to do with it. All right.
So a little bit like the previous speaker, I will start with a little bit of context and then get into summary but high-level detail on the property sector, touching on a few asset classes just to see what are the trends of note. So this first chart, I think Aruni talked about the growth of the country, and I just thought I would give you some context as to how Dar es Salaam over the years has really exploded in terms of population growth. And then it gets quite interesting what happens next. And various economists have talked about the population growth increasing to something like 10 million, between 9 to 12 million by 2030. I've gone here with the World Bank statistics. And the projection there is for Dar es Salaam to grow to 12 million people by 2030. So that obviously is a massive increase in the city. I mean, it's more than double the current population if you go with my figure rather than the 7 million. The second slide, just in terms of setting the scene, and this is probably not completely accurate, but it does give you at a high level the dynamics around population count. And this is set about 2 or 3 years ago. So it focuses on population count and then looks at two interesting asset classes, which is really the commercial sector and also the shopping center, which I will call retail during the rest of this presentation. And here, this is a chart that I borrowed from Jones Lang LaSalle, a well-known multinational who Pangani is partnered with in Tanzania. What we've done here is to look at the size of the country. In this case, Tanzania is about 45 million, now is about 50 million people. And then looked at these two asset classes of commercial, which is offices, and retail, which is the shopping centers. And you will see that if you compare Kenya, Tanzania, and South Africa, essentially the population isn't too dissimilar. Plus minus 45 to 50 million people. But when it comes to development of retail or development of commercial, Tanzania has really been behind. Now, of course, the 500,000 figure that's on the top right there, one can argue is a lot more. What we were capturing here is formalized commercial developments. So simple structures, some of the buildings you see in Kariakor, this wouldn't come into this category. So a structure like a PPF Golden Jubilee Towers or an Amani Place or National Housing, Morocco Square, these sorts of projects is what we would capture in here. But because it's formal on formal, there is still some relativity that one can get from these figures. So I guess the point that comes here is that we've seen explosive growth in population in the last chart. And yet when we look at the real estate sector and where are we in terms of maturity and development, the statistics suggest that the population has grown, but the investment hasn't kept pace. Again, this is high level, and we'll get to what that means in terms of details in a moment. What I've shown on this chart is the emergence of new nodes. So obviously the city center, which is sort of down here, the CBD area, has been historically the area that's seen the greatest investment. But as the population growth has exploded, infrastructure has struggled to keep pace with this growth in population. New nodes have emerged, and we all live in Dar, so we would know that the peninsula, which is the top one there, is popular now for commercial developments. And those commercial developments go right along the highway, Bagamoyo Road. If you look at a corporate like Vodacom, at least for the next few weeks, will remain to Mlimani City. But go back to the 90s or the early 2000s, where were all the cell phone companies in Dar? There was Tritel, which was in town. Vodacom was at PPF Towers here. Tigo was at Gerazani. And Airtel, which came along a little bit later, was really the first one to venture out towards that Kinondoni area. But if you look at the corporate scene today, a lot of those corporates have gone right around these various commercial hubs in the city. But really the key message that I wanted to leave with you, and again in terms of just understanding where we've come from, is that for landlords and for developers, Tanzania was an extremely exciting and rewarding market up until the recent past. Why do I say that? Look at those rents, particularly in the CBD, up to $25 per square meter being paid by corporates. This was between 20 to 50% higher than what Kenya or Uganda was charging for essentially a very similar construction cost. So, first three charts, great population growth, and then what we've seen is limited supply versus the other cities in the region, and certainly against South Africa, which of course is a very mature economy. And the developers who took advantage over the last 10 years, started to develop decent projects in some of these new nodes, have enjoyed fantastic returns. So all of this suggests that Tanzania was really poised for takeoff in terms of real estate. Have we taken off? I think the challenge really has come over the last 2 years, where there's been a lot of new government policy, and the government policy has led to uncertainty. And an example of that is the announcement that the government will move to Dodoma. Now, of course, where is the government primarily operating today? It's in the city center. So naturally, when 150,000 or 200,000 people are potentially leaving the city to go at short notice to a new town, that's fantastic for Dodoma. For Dar es Salaam, it creates some uncertainty about the future. So I think we are in a transition in the real estate sector. We were definitely on the path for takeoff, and where we are now, I think there's a little bit more uncertainty around what happens next. Similarly, if you look at, and again you mentioned this point earlier, the public sector has been asked to focus primarily on industries. So we've seen one of the main drivers of the growth over the last 10 years in commercial in particular, now switching off, which was touched on earlier, so I won't talk too much about that. But even on the private sector, that clip on the left there, this is really taken from The Guardian, I think it is, and this was going to be a transformational project which was to be launched in Dar last year, which was the Mara Group, and that was at the Oyster Bay Police Station. That would have been a 200,000 plus square meter development, mixed use, 3 hotels, hospital, and a 40,000 square meter retail development, and of course, very large commercial blocks. So both the private sector and the public sector are impacted by government policy. So if you look at the growth in commercial stock, essentially from about 250,000, 300,000 square meters, going back to 2010, the market exploded over the last 3-4 years. And a lot of that explosion came both from the public sector, pension funds, national housing, which became a very active developer, as you mentioned, but also the private sector. But the red line is probably the most serious line, and that is that the commercial stock and this is data that we benchmarked as Pangani Real Estate. The red line really looks at occupancy, and the occupancy has been fairly stable going back, sort of not the last 2 years, but before that, at 70% plus. But the occupancy is plummeting. So I think that supports what you were saying earlier, that there appears, at least in this asset class, which is commercial, there appears to have been a lot of investment in stock, and the growth in occupancy hasn't kept pace with that investment. But there is a caveat here, and the caveat is that occupancy is growing, but the growth in stock is faster than the growth in occupancy. So those who are clever developers or who are clever in general will realize that what that means is that if you are able to extract market share whilst others may be suffering, you can still create new projects and win over business, even in this circumstance of overall decline as noted in commercial occupancy. But from a sale point of view, our sampling, which captured about 5,000 units built over the last 5 years, what we found is that the majority of units built have been apartments. And I think you know this. If you live in the city, as you drive around, you see that the asset class that developers have primarily focused on has been apartments, followed to a much lower extent by villas, and then by townhouses. Now, is this the product that the majority of Tanzanians would want to buy? And I think the answer to that question, our research has suggested that probably not. I think most local buyers would intuitively prefer to have a standalone structure, their own garden, their own privacy, their own space for washing, possibly a maid's area, their own private parking arrangement. But the development has come in the form of apartments. So quite an interesting analysis there of, are developers building what the consumers want? And where have they been building? If I now just talk very briefly about retail, which is the shopping center asset class, the chart here picks up at a high level on the bubbles, which are depicting disposable income. So I hope you can all see this in the back, but essentially the light blue and the dark blue, these are the most affluent areas in Dar es Salaam, where people with the most income are residing and where a lot of business is happening, where the spend is the highest. Whereas the red would represent low income. This isn't our chart, before anyone quotes me, but I do feel that it gives you at a high level a sense of how is the city distributed in terms of income. And when you then relate that to shopping malls, naturally the majority of those shopping malls have come in the blue area and to a lesser extent in the industrial area, which is that thin belt that runs between the two red zones there. So you'd have, Quality Center, City Mall, Mkuki as examples on the airport road, and then going up north, everything from Dar Free Market right up to Mlimani City, along either the dark blue or the light blue. And then in the heart of the peninsula, there is a Peninsula Plaza, which is a new project that broke ground. I think the quality of development has generally been very patchy in Tanzania. Again, suggests that there's some opportunities there. Very quickly on the hotel asset class, again, I borrowed this chart from my partners at JLL. This is from a market study that was done in the first quarter of last year, and looking at the supply of branded hotels in Dar es Salaam. Now, the key word here is branded and formalized hotels in Dar es Salaam. I'm not sure if all of you realize this, but the highest number of hotels in the city is actually in the Sinza ward. I don't know if you're aware of that. I repeat that again. The greatest concentration of hotels in the city of Dar es Salaam is in the Sinza ward.
Thank you, sir. I have to say, and I'm sure you'll agree that it's quite an informative evening. But like I said, it's an informative night. We had Mr. Haruna Masebu earlier on, and he did teach us a new word, at least for me anyway, convocation. But besides that, we found out that when the real estate did start, 100,000 Tanzania shillings was a lot of money then. A lot of money. Well, standing here, it's still a lot of money for some of us. So, but thank you for that. And as far as Harry's presentation, Harry, I picked up quite a few things, of which I hope the things that you're picking up, you have your opportunity to ask them questions to boggle them. But 1960, a population of 100,000. 1980, this is Dar es Salaam, population shot up to 1 million. And by 2030, they expect it to be 12 million. Selling 500 million worth of developments, he doesn't do anything below that, is no easy feat. I'm sure we'll agree to that. And the fact that he's been to places like Long Island in New York in the States, Singapore, yeah, and then now he's here in Dar es Salaam, Tanzania. You already answered the question. Clearly this market is starved. You would not be here if it was gluten. So it's clearly starved, yeah? So let's give an introduction to the man who you can always tell a lot from somebody by the business card. It's amazing, it's nice. Mr. Azaa Malik. This is 500 million worth of a business card, yeah? Karibu sana.
And I'm very happy to let you guys know and put some smile on your faces that I've kept mine at a barely 7 to 8 slides. Going last always means that a lot of material will already be presented, and participants have already absorbed majority of the material which is presented. I'm representing Remax here today. The reason I'm here, and my introduction, as Mr. Michael keep pointing, my specialization is selling community developments. Usually community developments are expensive. They cost about $500 to $1 billion to put out, and that's why I have been involved in community developments, where he's taking the number of selling for not less than or around 500 million. I do not believe, and as I will go through, from an international perspective, from looking at a consumer perspective, because my perspective is totally different than our esteemed panelists. As you can see, one is an academic view from Mr. Haruna, and Mr. Bomani's is a very specialized commercial view. See, we come in, and I am representing more of, we always look at masses. We look at a market in general, rather than an asset class, and we tend to see how we can work in the markets that are actually growing. So from my perspective, and as I would move forward and show you, market is starved. It's just making a business decision how to spend your money wisely to get the most out of it. There is a substantial amount of ROI by international standards. You can make, in a developed market, anywhere from 3 to 5%, 7% return annually. And where you take a bigger risk, you're supposed to get paid anywhere from 30 to 50 to 100% on the markups and then your risk analysis. Tanzanian market with a lower risk still has very high return ratios, dependent upon the kind of product or the kind of project that you're investing in. As Mr. Bomani mentioned, there are sectors that need to be addressed. And I kept my presentation very strictly to one sector, low-income housing. Any research that you can come across, or you will come across in different presentations and forums, will point out one factor which is non-debatable, And that fact is, as very evident from my esteemed panelists' review and the data presented, low-income housing is the need of this country. It's been drummed in, it's been publicized, it's been asked again and again by the public, by the government, by all research, that we are in a dire need. There is a huge shortage. I mean, the absorption rates are in 1,000-fold, not in 100-fold, when that product is delivered. So, yet again and again, when unwise choices are made without research-based development, then what happens is you get a bigger supply, which is trying to cater to the small masses. If you're trying to cater to the 2% of Tanzanian market, which is living on the peninsula, then you should be ready for a long-term 7, 8, 10, 15-year return on your investment. If you take a look at it, and I'm a foreigner, I've been only here 2.5 years. I look at Dar es Salaam, I don't see peninsula. I see banana, I see Masangolo, I see areas like Goba. Those are the areas that are actually developed already. Like you mentioned, Sala, Tegeta. You know, you start moving around, you get into your car, you start driving around, and what did you come across? Culture. And what is culture in housing right now? Progressive building. And you're not the only nation that has that culture. You know, you end up in India, Pakistan, China. You know, 1/3 of the world's population lives that culture. It's progressive building. You save, you buy a plot, you build on it because you don't want to pay an 18% interest rate when the financial products in the market are expensive. So this is how the millennial generation, or our fathers and Mr. Haruna's generation, people saved, people built, and had assets which were clear of any debt on them. So that's a mindset. So as developers, as a market, you have to answer that mindset. How do you answer it? Is where the key is. Now, we're not the first ones. Tanzanians are not the first ones. Africa is actually lucky that there are nations that have gone through this process 5 decades ago, 4 decades ago. So you have models to follow without doing experimentation. You can pick India's model. Pakistan has a population of close to 300, unofficial population, officially close to 200 million people. 6th largest country. And what happens in Pakistan is infrastructure, developed land delivery. Like my esteemed panelist mentioned here, 3 kinds of land in Tanzania. Even in those 3 kinds, the general kind, the land usage is still disputed, is still not dictated, urban planning is missing. Those elements need to come in from the government side. But you have to look at other nations and see infrastructure is predominantly been coming from private sector, from systems to automation and everything, which can be implemented here, and the efficiency of the BRT will probably go even higher. But that's government infrastructure. Governments are supposed to provide you a hierarchically, a more bird's eye view of that infrastructure.